We are glad to have you with us again today. This is Blair Marvin, Vice President of the Augusta Metro Chamber of Commerce. We hope you're all staying safe and healthy and trust you're well. We are joined here today with Rebecca Kruckrow and Rick McMurray from the UGA Small Business Development Center, and on the phone with Jay Forrester, President of South State Bank. Before we get started this afternoon, I just want to mention that this webinar is part of our Achieving More Together Today series and ultimately initiative, where we send daily communications and social posts with tips and resources, up to the date information to try and help all of you stay afloat of what is going on, and recent updates, just continuing to be a resource for you with providing information to energize you and keep you positive, and understanding the ways that we can adapt to business changes during this time. So we did a presentation on leading and managing a remote workforce last Tuesday to kick off the program. And we had a presentation by SME CPAs on the Families First Response Act on last Thursday. All of this information is on our website. We hope you'll take a chance to go there. The recordings will be available after the live webinar for you to listen to as well. And we'll have one again this Thursday. So Tuesdays and Thursdays at 3. Hope you'll keep an eye out for the opportunity to join us and to connect in the new way that we're all connecting. So before I turn it over to our panelists, if you have a question that you'd like to submit at any point during this webinar, you can push the questions tab at the bottom of your screen, and that will be routed to Sarah Best, our Director of Events, and she'll make sure that we get it in their capable hands, realizing that they're not able to address businesses' specific situations or questions that would be specific to the business and would need to be more broad in terms of the loan funding options available. So without further ado, Rebecca, Jay, Rick, thanks for joining us today. Thanks for providing us this valuable information, and I'm turning it over now. Thank you.
Thank you, Blair. Happy to be here. We're just going to start today with a little introduction of each of us, and I'm going to kind of do an overview of some of the things we're hearing that come in as far as questions to our office. There may or may not be some specific answers available because it's very fluid at this time, but I also want to let you know that I was a business owner at one time. I'm retired from education, training, and owning a business, and I don't know what I would do right now under these circumstances. So I can understand that there would be pressure and stress, but I can also assure you that there is something on the other side of all this, and we're going to work to be able to help. The government's put some parameters in place to be able to help as many small businesses as possible. And so with that, I'm just going to turn it over. Rick, do you mind introducing yourself?
Sure, thanks, Rebecca. I'm Rick McMurray, the director here at the Small Business Development Center in Augusta. Again, I am a small business owner, not in the day-to-day stuff anymore, but in 1993, moved out here from Oklahoma, started putting in the sonic drive-ins in the CSRA. And, you know, we have 12 of those now. I don't do any of the day-to-day stuff and haven't for years since I retired. Am invested in a few other businesses in addition to those in the area. So still, you know, we obviously are struggling with the same thing all the other small businesses are struggling with, and that's making sure that we take care of our employees and that we try to do as much as we can to generate revenue. And trying to, you know, what we're doing here at the Small Business Development Center is trying to figure out these government programs and trying to figure out what they really mean and how we can use those programs to help our small business owners weather the storm, so to speak. So, you know, we know that there are a lot of small business owners that were struggling and failing prior to this happening, but there are a lot more small business owners that were doing okay prior to this and are struggling now. And with a little help, you know, we know those folks will make it through to the other side. So that's kind of what we're here for. Again, as Rebecca said, we're not going to have the answers to all the questions, but we'll share with you the information that we know.
And then Jay, do you mind introducing yourself, please?
Sure. I'm Jay Forrester, Division President of South State Bank here in Augusta, and wanted to be a part of this call to speak a little bit from the banking perspective concerning the SBA programs that are out there, particularly as it relates to the Paycheck Protection Program. Want to speak a little bit to what we know at this point, and also share what we don't know. It's a very fluid situation. We're still waiting on guidance from the SBA on exactly how to apply and how to get in the queue, so to speak. So I want to provide, again, the clarity around what we do know, provide resources that are available, and answer any questions that you have today. So I appreciate the opportunity to be here, and thanks to the Chamber for setting this up.
Absolutely. Thank you, Blair. So I'm just going to kind of talk about some of the questions that we have coming in to the UGA SBDC office here in Augusta, which are similar across the state as we talk to our colleagues across Georgia, and try to cover the two bases of options that are available for small businesses, and one of those being the EIDL, Economic Injury Disaster Loan, which was implemented a week ago Friday. The second part of that being what Jay mentioned, the PPP, Paycheck Protection Plan. And I'm sure Jay will be able to answer several of those questions as well as any of us can when those topics come about. So the EIDL is a loan that you're going to apply for as a small business directly from the SBA. And again, I'm going to throw this over to Rick here in just a second because he has all the deets on that. But it is a loan directly from the SBA. The SBA is going to determine, based on the information that you provide to them, how much you are going to be allowed to get from that on your financials based on a year ago. And there's some other intricate questions about that we could maybe address later in the webinar. But then there's the PPP, which is going to allow some part of forgiveness in that loan. Not all of it will be forgiven, but there's a certain part that's going to be covered. So Rick, do you want to get into some of the details or what you know and what you've been asked from your clients so far?
Sure. So here's one of the things that has happened since last week, and this has just happened in the last couple of days. The process for applying is significantly streamlined compared to last week. I had a client that has 5 different businesses. He applied under the EIDL program last week for one business. Took him about 2.5 hours, and that was in the evening when the website wasn't clogged up or down. He went on this morning and applied for the other 4 businesses in about 30 minutes total. So they've streamlined that process significantly. There's only a few pieces of information they're asking for now. You do have to have your tax ID number. You do have to have some information about your business, but it's much smoother than it was. And the other thing that is improved on this is there is a $10,000 part of that EIDL loan that is going to be considered a grant at some point, is what we're hearing. So let's say you end up with $100,000 total, according to the information that we have. And again, this is just the information we have, so it's always subject to change. That $10,000 would be considered a grant. The rest of that would be the balance that you would have to pay on that loan. So that one is, you can get a loan up to $2 million. And the way that one works is they take your revenue minus your cost of goods to get what they call gross revenue. And then you can receive up to 50% of that amount in the form of a loan. So again, it's capped at $2 million. But the kind of the interesting thing about that is you can pretty much use that for whatever you want to, because it's a loan that's going to be paid back up to 30 years. And what we're hearing is they're going to all be 30 years rather than up to 30 years. But again, we could get different interpretations from the SBA as time goes on with this thing. So that's kind of how the EIDL loan works. The CARES loan is a little bit different in that you can use it for payroll, for rent, for whatever also. But kind of the interesting thing about the CARES loan is if you keep your workers on payroll for up to 8 weeks after you receive the loan, then they're going to forgive that part of the loan as a grant. So you don't have to pay that back. So, but again, that one is so new, and this is one of the things that Jay and the other bankers that we're dealing with right now are just waiting on guidelines from the SBA for, because we kind of know what's in the bill, what was in the bill, the almost 900-page bill that Congress passed. But what we don't know is how the SBA is going to interpret what's in that bill and how they're going to administer that program. So, we're hoping by Friday we'll have something from the SBA, but, we don't know that.
And there's another significant difference between the EIDL and the PPP, the CARES Act and loans, is that the extended term on the EIDL is 30 years, but the payback on the CARES loan is 10.
That's correct.
And so whichever one's going to be best for your business is what you're going to need to look into. But there are those comparisons and contrasts that are going to have to be taken into consideration.
Well, and from what we're hearing, you can apply for both loans.
Yeah, that's what I understand.
But you cannot use money you can't duplicate the use of the money. In other words, you can't use both loans and pay payroll out of those. So, if one of the loans takes care of some of your expenses and you have expenses beyond that, then you can use the other loan, maybe the EIDL loan that has the 30-year payback to cover some of those additional expenses. But you can't have, like, a single business can't have two of either the EIDL or the CARES loans, but they can have one of each. As long as you don't have duplication, what you're using the loans for.
And back to a lot of the calls that we get, it is really a good feeling to know that the people that are calling in and asking these questions want to know how they can help their employees. And that shows a great core value for the small businesses, and we want to be able to provide as much information. So regarding the ability to help employees and keeping them on and not going out of business and things like that, Jay, would you like to address what you know about the PPP?
Yeah, so first let me say the banking industry in general is fully committed to being a part of this process, as most of you know, and the SBA and the federal government, in fact, recognized that while the EIDL loan was much streamlined from a normal SBA process, to really get the money out in the hands of the small businesses quickly, the SBA needed to open this up to all lenders. So the banks and credit unions out there that are federally insured will all be participating in this program, whereas normally an SBA 7A loan, you have to be a preferred lender. So this will be opened up to all lenders. It will be much streamlined over the normal process. In fact, to qualify, basically you're looking at, if you're a small business with fewer than 500 employees and you have payroll, you've had payroll going back prior to February 15th, you'll take a monthly average of your payroll times 2.5%, and that'll be the amount you'll qualify for under the PPP program, Paycheck Protection Program. There's no obligation if you apply to accept the loan. The real streamlined piece of this is there's no collateral required on that loan. There's no personal guarantee required. The small business owner, as we understand it, will have to certify that they have been impacted by the coronavirus situation. But that, as we know it now, is the extent of it. Other than documenting that payroll, that monthly average, and then attesting to the fact that you've been impacted by the virus, that's it. And we're waiting on guidance now, as Rick and Rebecca both said, to exactly how to apply for that, how to get in the queue for that. What you can be doing now as a small business owner is reach out to your bank, let them know that you want to apply, and get on the list for a callback at this point. So there's no application available, but just get on that list and talk to your banker and be on that callback list. So when that guidance does come out, your banker can reach out to you and already have your information, at least from a contact standpoint, to get back with you quickly. One other resource that's not this over and above this SBA program that we're talking about, both these programs, is most banks, if not all, have already implemented payment deferral plans. So if you haven't already, you may want to reach out to your bank and ask about deferring your payments on your commercial loan. Most are doing up to 90 days, some 120 days, principal and interest, basically with no questions asked. If you say you need it, you typically get it. So if you haven't already done that, that's available from just kind of a doing the right thing standpoint from the banking industry.
Thank you.
Let me build on a little bit on what Jay said there. In addition to that, the 2.5 times your monthly average wages, he mentioned no personal guarantee, no collateral. So that is one difference between the CARES bill, which has the preferred or the payment protection built in, and the EIDL. The EIDL will have a guarantee collateral issue attached to that, where this one won't. And this one is 100% SBA backed, so that it even reduces the risk further for banks that participate in this process.
Okay. I'm sorry, go ahead.
I was just going to give an example under this PPP of how this might look, just to try to, I mean, there are a lot of, again, moving parts, but if you're a small business with under 500 employees and your average monthly payroll is $150,000 and you apply at your bank for the PPP loan and attest to the fact that you've been impacted by COVID-19, you would qualify for, based on that average monthly payroll of $150,000, you'd qualify for a loan of $375,000. That's 2.5 times that average monthly number. And then over the next 8 weeks, if you've incurred $350,000 in eligible payroll, rent, and utility expenses, you will then come back to the bank and apply for loan forgiveness. And in this scenario, you qualify for $375,000. You had $350,000 in payroll, rent, utilities, and mortgage expenses. So that $350,000 would be forgiven at the end of that 8-week period. The remainder of that loan under this scenario of $25,000 would then be amortized over up to 10 years with 100% guarantee from the SBA at a rate no higher than 4%. So hopefully that is a little bit of a simple example of how that might work. But to qualify, it's 2.5 times your average monthly payroll. That's your amount that you're looking at.
And there are some scenarios that we've been asked about regarding the fact that if you already have a relationship is in the form of an SBA loan, those are coming through quicker at an amount of $25,000. Is that correct, Rick? That if you already have if you already have a situation with the SBA that you have a loan out there, a relationship with an SBA loan somehow, that you can get a quicker $25,000 based on the merit with the loans that you already have. Is that correct?
Yeah, I don't know exactly whether how firm that is or not. I think that's one of the things we got to wait till we hear from the SBA on.
Right, interpretation.
Yeah.
Here's a question from an attendee. One of the attendees has been told that the payroll company says they are not allowed to apply for more than one type of loan. And we as panelists are saying that we can apply for each type of loan. Is that correct? And from my understanding, you can apply for both types of loans.
Yes, as long as they're not for duplication of expenses.
Right.
That's what we know as of right now. Again, that could change whenever the SBA does its final interpretation of the CARES Act.
That's correct. And
that's my understanding as well from multiple sources is that you can apply for both as long as you don't duplicate use of funds. For example, you could apply under the EIDL for a loan for inventory, let's say, and at the same time apply for a PPP to cover payroll, rent, and utilities.
Correct.
So there's not a dual purpose there.
Correct. And just because you apply for the EIDL, I think this was mentioned earlier in the conversation, you don't, if things shake out differently, you don't have to accept that loan. Correct?
That's correct.
That's correct.
All right. What other talking points, Rick? I know you've got your sheet of information there. We've had a lot of conversations with people across the state.
I've just got tons of information that we have available that we've been given so far. So much we don't know yet. But at this point, I think, unless Jay has any other points he wants to talk about, let's just open it up and let people ask questions, and we'll try to answer those as best we can.
I'm fine with that.
Yep, sounds good.
We are talking about a loan period between the loan application window between February 15th and June 30th. Just to clarify that, is that correct?
Correct.
Okay. So just because you decide, maybe you're not going to see some of the impact right now as immediate as some are. And let's say in May, you figured out that there's going to be some issues, you can apply up until June 30th for these funds.
Yeah, that's correct.
Okay. All right, here's a question. So it says, what, if any, expansions have there been in the small business debt relief program? I have some information on that, I think. I'll have to look it up.
So saying I'm not real sure that I understand that question.
Well, here, hang on just a second. In one of my 4,000 documents that I've read in the last week, let's see. Hang on.
Rebecca, while you look that up, one thing that I do know that's in the CARES Act is there's an additional $17 billion allocated for 6 months of P&I payments on existing 7A loans. And
Yes.
I think that's where that question's leading.
That's where that.
That's exactly what I was looking at.
Again,
Yeah.
don't know the details of how to apply for that. If my understanding is that's for existing 7A loans, so you would go to your 7A lender in that case, who would then work with the SBA to get that approved. But that is in the bill.
And in addition to that,
I was going to say, I still think though, that kind of falls under that, even though that 17 million or billion is there, you still have the banker's still going to have the same issue until they know kind of what the rules are for working, reworking those. I don't know that, like Jay said, call your banker and get in queue so that you're not way down the list when all this breaks loose. But even in that, reworking some of those existing loans, they're still going to be, they're still going to have to wait to see what the SBA says, what that process is, how that's going to work.
Right, and there's some wording in addition to that that says this 6 months relief will also be available to those who take out new loans within the 6 months of this bill becoming law. So again, all up to interpretation at this point, but that is something that has been thrown out there. I have another question if there's no more comments on that one.
Go ahead.
All right, it says, when is the PPP loan forgiven? I just heard end of 8 weeks. Do you ask your lender to approve the forgiveness? What's the process? And are there stipulations for the forgiveness? And that's a loaded question. There's lots of information on it, and there are definitely stipulations for the forgiveness. And Jay, do you know that anything that you want to talk to on directly to that question?
Sure. So I'll preface it by saying this is as we understand it today, and guidance still has to come out. But the understanding as it is written now is at the end of the 8-week period, the borrower would come back to the bank and apply for forgiveness. And at this point, we don't know, is that a one-page document or what needs to be presented to the bank to get that approved. But at the end of 8 weeks, you'd come back to the bank and apply for forgiveness. The bank would then work with the SBA, and assuming that you didn't, as a small business owner, did not lay off anybody during that period, the full amount for payroll and some other things, rent and utilities, could be forgiven or will be forgiven. Now, if you laid off some employees during that period of time, there is a formula that it's based on a pro rata. So say you had 100 employees and you laid off 25, that forgiveness piece would be reduced by 25% based on that reduction in FTEs. But assuming you did not lay off any during that period, it would be forgiven. But yes, you would go back to your lender to apply for that. And our understanding in talking with members of Congress and the ABA, which is the American Bankers Association, the expectation is that the SBA is going to be lenient with that. And I say lenient, they're going to not hopefully cover us up with red tape on that forgiveness. The idea is to streamline this and be efficient.
And there basically is some record keeping involved with that you have to, if I understand correctly, you have to keep track of what you paid out during that time. But again, they're going to streamline as much as they can, if that's what I understand. So.
Correct.
Any more questions on that one? Because there's another one coming in.
Go ahead.
So regarding EIDL, could you explain more on the $10,000 advance? I'm getting a lot of questions on this from small businesses. So do we want to elaborate on the $10,000 advance that we mentioned?
Supposedly, the way the $10,000 advance works, and my client earlier today that did 4 of his businesses said that one of the questions on each one of those, or one of the things you have to provide, is your bank account. And so the reason for that is so that $10,000 can be directly deposited into the bank account. And so from the stuff that we're reading, the information we're getting, and Jay, you can share whether you are getting something different, but if you apply for the EIDL program, that $10,000 is you can receive that whether you get rejected for the whole loan that you're applying for through the EIDL. But that's kind of it's purely the Treasury makes the determination on that. I mean, that's the only information that we have is, you apply and the Treasury makes the determination. And so they're going to use your credit scores. They're going to use some other stuff to make that determination. So, other than that, we don't have anything. Jay may have some different information, but that's about all we have on
it. That's my understanding as well.
Okay, hope that answered your question to the one that asked it. Another question, and this is a great question as well. Should commissions be included when determining your average monthly payroll?
Should
Can you repeat
commission-
that question?
Yes. Should commissions be included when you determine your average monthly payroll?
Give me a second. Let me look down at my documents here.
I knew that was going to happen because it's in here somewhere.
Yes, I
So-
believe that is accurate. From what
Yeah,
I'm
here's-
reading here,
Yeah, go ahead, Jay.
yeah, so included in payroll cost is salary, wage, commission, or other similar compensation.
Yes.
Okay.
Payment of cash, tip, or equivalent. So that's commission is considered part of that.
And kind of a follow up on that line of questioning, another attendee is asked in regards to that question on an average payroll before the disaster. Is that correct? And so, yes, they're comparing things to a year ago during this time frame. Right?
Yes, it's a 12-month monthly average payroll going back a year.
Correct. And if you haven't been in business for a year, then they're going to use your January, February. If you haven't been in business but just a few months, they're going to go back and take January and February of this year to use as the determining what your average monthly payroll is.
And I think I read somewhere that you had to be in business by January 31st. Yeah.
Of this
Is that
year?
correct? Yes.
Yes.
Okay. Any more to add to that one?
Mhm.
All right, another question. Do either of these loans have any impact on the Social Security relief being offered? And I'm not sure where that's going. I'm not sure.
Ask that again.
The question says, do either of these loans have any impact on the Social Security relief being offered? I'm not sure what they're referring to. We may need clarification on that.
Yeah, I don't know on that one. I would encourage folks to ask their accountant that question, perhaps.
Right.
Yeah, I know what they're asking about, but there's nothing in either the EIDL information or CARES. They're talking about where the federal government eliminates a portion of, I believe it's Medicare, not FICA, that you don't pay that for a period of time. So, but there's nothing in here that relates to that. So that's something that they would definitely need to talk to their CPA about, and even their CPA may not know that at this point.
All right, another question. Are you ready?
Mm-hmm.
If you do the Paycheck Protection Plan and then several months later, you still have to lay off employees, do they still qualify to draw unemployment? And I know this is kind of in the gray area as well, and probably is yet to be determined. But let me repeat it. If you do have the Paycheck Protection Plan and then several months later you have to lay off employees, do they still qualify to draw unemployment?
That's a question that, depending on which state you're in, whether you're in Georgia or South Carolina, that's a question you probably need to verify with the Department of Labor in that particular state. My common sense thinking is if you keep them on through that 8 weeks and for the loan forgiveness program and things haven't turned around by then, and then you lay them off, I don't know why they wouldn't be eligible to draw unemployment at that time. But again, I would say that's a Department of Labor question right there.
Okay.
Jay, what do you think?
Yeah, I agree on that. I would definitely check that route. But I agree with your assessment as well that I don't know why they would not be eligible.
I mean, if they're eligible to draw it and you lay them off today, why wouldn't they be eligible to draw it 2 months after the payroll protection plan program is over. So yeah.
That would make
But
sense. But again, you're going to have to go to your State Department of Labor for interpretation on it.
And I can tell you that the Georgia laws and the South Carolina laws are different on this,
Right.
this whole thing,
They are.
and how that process works.
Right. Next question. 501c3 organizations are apparently eligible for funding. What recommendations do you have for these organizations? And so for the PPP, yes, the 501c3 organizations are available. And as far as our office, we are charged with working for-profit groups. There are certainly groups that work with 501c3 and other nonprofits, and SCORE is one of those groups, score.org. You can talk with a mentor one-on-one about those types of programs if you're in the 501c3 program. And as far as advice, Rick, do you have anything other than talk with people involved with the nonprofits more readily?
Yeah, you just got to deal with folks that deal with nonprofits there, because that's not an area that we operate in.
But definitely apply.
Sure.
Yeah, my understanding on the PPP in particular is that, I mean, it specifically says 501c3s are eligible.
Yes.
Typically in the SBA 7A world, there's a specific carve out for religious organizations. But in the case of the PPP, as I read it, it's all 501c3 regardless. The EIDL, I think it does exclude religious organizations, but
that is
for
correct.
PPP, I believe all 501c3s are covered.
That is correct. That's the interpretation.
That is true.
Okay. All right, next question. As the criteria for the CARE loan is someone must certify they are impacted by the coronavirus, is an applicant not allowed to apply if they are pretty certain they will be impacted, not yet, but in the near future? So that kind of goes back to what I was saying earlier. You can apply for these up to June 30th, or you can apply now. Rick, what do you say about that?
Well, I think Jay mentioned it earlier when he said you have to attest to the banker when you make the application that your business has been impacted. So that's up to the individual to, attest that you have been impacted or not.
And so if they are not impacted currently, but in a month or two down the road, they find they've been adversely impacted by this, there's still that window to apply at that time.
You have till June 30 to make the application.
Right. Correct.
That's correct.
All right. Next question. With the PPP, my understanding is that there is a cap in using it towards employee payroll for only those that earn less than $100,000 annually. Is that correct? Yes.
Well, there's that provision. It says what costs are not eligible for payroll. And so in the answer, it says employee or owner compensation over 100,000. So it is capped, at 100,000 per employee or owner.
And then there's a kind of an addendum to that sentence that says as prorated for the covered period. So I think it's up to 100,000 annually as prorated. That's we need some clarity on that math, honestly. But
yeah, that's
so
some of that.
That's a gray area right now.
33,000?
Yeah, well, and that's some stuff like Jay said. We're waiting on clarification from the SBA on exactly what does that mean.
Right. All right. Next question. Please review again, I guess this is a request. Please review again the circumstances in which portion of CARES loan would have to be repaid or amortized over 10 years at no more than 4%. Jay, I think you originally spoke to that. Do you mind recapping?
yeah, so all right, the example I gave was if you're a small business and you have an average monthly payroll of 150,000, so the amount you would qualify for would be 2.5 times that. So you would qualify for a loan of 375,000. And say over the next 8 weeks, over the covered period, you had 350,000 in payroll, rent, and utilities that were eligible to be forgiven. So that 350 would be forgiven. Anything, say you used part of that 375 for another purpose besides payroll, rent, or utilities, that $25,000 balance would not be forgiven. It would then be amortized over 10 years at 4% or less. Hopefully that clarified that a little bit.
Yeah, I was gonna say, I hope that clarified. So basically, you are going to be forgiven for an amount that covers the payroll, rent, and utilities for the time period we're discussing. And then if there's anything that was loaned to you that doesn't cover that, it goes over the 10 years. So, all right, another
That's
question.
correct. But the principal and interest on that eligible portion is fully forgiven.
Right. Okay. Another PPP loan question, popular topic. If you have placed employees on partial unemployment until such time that the PPP details are available, would we still qualify for the PPP as long as once approved for the PPP, we place employees back on full payroll? Good question.
Our understanding as it is written now is if you apply for the PPP loan and you get that loan, then you do have to call those employees back to work and put them to work for a minimum of 8 weeks. Do you have anything different, Jay?
No, that's my understanding that even if you've laid them off already or furloughed, whatever, you apply, you can bring them, you can rehire them and be covered.
Right. And the one thing that as business owners need to make sure is that they talk to their employees about not trying to double dip. In other words, they're drawing unemployment and you've called them back to work, put them on the payroll and are paying them, because when you file your monthly or quarterly report with the Department of Labor, and they go back and check and they see that Jane Doe is drawing unemployment, but yet you're paying her to be at work, Jane Doe is going to have a little issue that she's going to have to deal with. So I know that was probably covered last week by the SME folks, but just to kind of reiterate, they can't double dip. They can't continue to draw unemployment once you call them back and are paying them to go to work.
One of the questions is, what is the term and rate for the EIDL loan? For nonprofits, it's 2.75%. For for-profits, it's 3.75%, and it's 30 years.
Right.
I think they at one time they said up to 30 years, but I think they're going to make it 30 years.
Yeah, the initially it said up to 30 years, but you know what we're hearing now is that all loans under the EIDL are going to be for 30 years. But people don't have to keep them for 30 years. They can pay those off early if they choose.
Right.
And
There's no early prepayment penalty.
Yes.
All right. Here's a good question. When calculating average payroll, would we include the 100,000 plus salaries? Hold off. Wait a minute. Someone just asked. So it sounds as though a self-employed individual with no employees would only consider the EIDL and not the PPP.
I think that depends.
I think so too.
Yeah, sole proprietors or independent contractors are included in the PPP.
Yes.
Right. Yeah.
There has been discussion, and there's no answer, but there's been a discussion of, if I am a business owner and I hire this subcontractor to do things, how do I include them on that? And I don't want to get into that can of worms because I don't have an answer. But basically, the people that are the sole proprietors, if they're hired to do some work for someone else, the sole proprietors are filing for themselves, basically. They're applying for themselves.
Yeah, I think it gets into there are some types of businesses where you have a contracted person that's required for you to do conduct your business. Without that person, you can't conduct your business. Therefore, the rest of your employees can't work. And so then it comes into even though they're paid on a contract basis, are they considered part of the compensation under PPP or not? And if not, then that may be one of those expenses that you can use, to compensate them under the EIDL program. So again, that's some of the stuff that until we get all the final stuff on the CARES from the SBA, it's kind of hard to know exactly how to answer a question like that.
Looks like we're still waiting on a couple questions perhaps to come in. Let me see. I'm just looking through my notes of everything that has come across the desk. From a banking standpoint, Jay, don't want to put you on the spot, but when the lenders are looking for information, would they, what types of things are they going to need from a banking perspective? I know there are requirements that the SBA is going to have. Are you going to need an executive summary of their business and things like that, or have you determined that yet?
We have not determined that yet. I think ideally the small business is going to go to a bank that they have already established a relationship with. So your bank will, in most cases, already have most of that information. And the idea is that this application process will be very much streamlined. And what I imagine is that the banks are going to go with the minimum guidance from the SBA on this and not attempt to add layers to it, because we don't want to be an impediment to the process at all. And we're hopeful that the SBA will keep their piece at a minimum. And the idea is that we comply with that and not go after anything additional from an information standpoint.
Here's a good question. Can expansion of your business be included? Now, I would say no to that, but here's the caveat to the question. I have a freestanding restaurant without a drive-through. So can expansion of the business be included? Generally, they're saying no. The expansion cannot be part of these expenses.
There's nothing in the information on either one of those bills that says loans are available for expansion purposes.
Right. So we'd probably have to say no. I mean, that would not.
Well, no until we get the final verbiage on the CARES thing. I mean, there could be something in there, but right now the answer is no, unless we get further guidance.
Yeah, I would agree. I would think that would fall under either traditional bank financing, or if you did go the SBA 7A route, there is an expansion in the Business Express program from $350,000 to $1 million. So you could perhaps go through the SBA Express program for that. However, that's not part of the forgiveness under PPP.
Yeah.
Great. Another question. Could you furlough some employees and apply for partial unemployment? Hang on, I gotta say it. I moved it. Could you furlough some employees and apply for partial unemployment benefits for them and apply for PPE only for the employees that remain working for the rest of that 8-week period?
I think it depends on when. Go ahead, Jay.
If I understand the question, if at the time of application, the PPP forgiveness is based on number of employees at the time of application.
Right.
So if you don't furlough those employees from the time you apply to the end of the 8-week period, that piece is forgiven. Or if you I think if you add if you add employees back to your payroll during that period, that piece is forgiven.
It says, though, if you furlough some and then apply for those that remain, is that going to be covered for those that remain? I mean, I think so.
I think so. For the ones that remain, yes.
And the ones that are furloughed, can they receive the unemployment benefits? And again, that's a Department of Labor question, but.
It is, but I mean, it's one of those things. See, here's the thing, and again, they covered this I'm sure they covered this in the SME piece last week, but if you're a small business and you're laying off people because of lack of work, you have to go through the Department of Labor onto your portal, and you have to electronically file unemployment for those employees. They don't do that. You do that. That's the law in the state of Georgia. Now, it's different in South Carolina, but in Georgia, that's the law. So if you've laid them off and you file for unemployment, then they're not in your employee base at the time you make that loan. Those ones that are in the employee base at the time you make that loan, like Jay said, those are the ones that you have to maintain employment for 8 weeks, or you go into a pro rata reduction in the amount of that, forgiveness amount on that loan.
Okay, thank you. Next question. Another PPP question. Small business with multiple employees. It looks like it's eligible at 2.5 times payroll. That's correct. Does that average payroll calculation include the 100,000 plus salaries, even though the money cannot be used to pay those?
Not for qualification purposes.
It is not.
So no, your average, the amount that you would qualify for would be based on employees under 100,000. And what we're unclear on is any portion of that 100,000 covered under PPP? And this is my personal opinion. I think that it is up to a certain amount, just not over that amount. But that's guidance that's got to come out. We need more clarity on that.
Well,
you wouldn't.
I've got one document here from a U.S. Senator's office, and so basically it says excluding compensation over 100,000. So I'm with Jay. I'm thinking if you have an employee that makes 150, 100 of that gets included in your payroll. The other 50 doesn't get included in your payroll. But again, we've got to see the final interpretation by the SBA. But according to, and this document is again from a U.S. Senator's office from the actual. These are the parts of the actual bill that we're getting information on, but it does say excluding compensation over 100. So I'm kind of like Jay. I'm thinking up to 100, you can include that for an employee.
Okay. Hang on just a second. Another question. If I get approved for a PPP loan and call back employees, but as a restaurant have little business to give them full hours, can they still get partial unemployment and partial pay from us?
I don't know the answer to that.
Yeah,
We'll have to follow up on that.
Yeah, we don't have enough information for that question right now. So
yeah, and it says that the question makes sense, and it does. We just don't really have enough
perfect sense. There's just nothing in the SBA interpretation on that yet that addresses that particular thing.
All right. Okay. Okay. All right, let's see what this one is. Do you calculate the average monthly payroll using January through December 2019 or the 12 months immediately prior to the application date or other?
If you've been in business for over a year, you'd use the trailing 12 months.
Right.
Right. Now, here is the question of the day. We have all asked this. We have all answered this. And we're just going to do it again. Question of the day is, when are all the final details likely to be released?
And the answer is, who knows?
Yeah.
We are hearing by Friday. However, that doesn't necessarily mean that may happen.
Yeah.
Yeah, that's what we're hearing by Friday. I've heard there could be some information coming out earlier than that, but Friday's been kind of now the SBA has up to 30 days to issue guidance. We don't think it's going to take that long. Friday's been kind of the consensus date that we've heard at this point.
Okay. I think we may have time for one more question if there is one. Or Blair or Sarah, you let me know.
We have time for one more question. I think Sarah's sending it over. Thank you.
Okay. All right, so here it is. If full-time employees choose to leave, either from contracting the virus or fear of contracting the virus, will PPP loan cover temp hires who would be necessary to operate? Great question. Don't know if we have an answer, but that's a great question. So I'll repeat it one more time. If full-time employees choose to leave either from contracting the virus or fear of contracting the virus, will PPP loan cover temp hires who would be necessary to operate?
I've heard conflicting information on temporary versus full-time. I think that's something we're going to have to wait for guidance on, unfortunately. I don't know enough about that particular instance.
Yeah, again, we don't have final information, but going back to just kind of using the common sense approach is, if the employee leaves and you hire a temp person to replace them, then you're going to really have to keep that temp person for that 8-week period, or in essence, your payroll has been reduced. So, I mean, I don't think you could hire a temp person for 3 weeks and there's 4 weeks left in the payroll period, and then you let the temp person go. Then you haven't maintained that payroll amount, you know, that you had, that average amount that you had. But again, that's just my common sense thinking on it. Until we get, you know, some final answers from the SBA on how they're going to determine the payroll calculation and the computation of everything, we won't really know for sure.
All right. Well, thank you so much for
Blair, real quick. There's a pretty good piece on the U.S. Chamber website for those that are still on the call that address some of these calculations and some of the payroll questions. The website for the U.S. Chamber is uschamber.com. So just FYI, that may answer a few of these questions that have come up today that we didn't have a full answer on.
Right. That's a great point. Thanks, Jay. We can actually get that document and include it as part of our follow-up materials to those that are on the webinar today. So thanks to Rebecca and Rick and Jay for all of the great information. We know that it's a fluid topic, and so we appreciate you presenting what you know as of today. And thank you all who joined us. We will be following this webinar up with an email of the recorded webinar. And as I just mentioned, that document as a resource from the U.S. Chamber's website, as well as the contact information for our presenters today. We also, as I mentioned at the beginning of the call, are hosting all of the recorded webinars on our website. So if you would like to look for past opportunities, or if you're unable to attend a future one, just know you can reference the material there. We hope that you'll join us Thursday at 3 with Kate Gary from Allison South presenting on social media strategy. She'll be offering tips to engage with your current customers, attempt to reach new business with adapted methods at this time, and then how to really maximize the e-commerce portion of doing business. Thank you for joining us, and we hope you have a great rest of your afternoon.
Bye.